understand what this really means, and who better than the MD of Deccan Gold Mines himself, Hanuma Prasad Modali, joining in on the show right now to talk about exactly that. Mr. Modali, great to have you today on ET Now. Given the fact that we've just raised gold import duty to 15%, the highest in over a decade's time, for a domestic gold miner such as you, the higher import cost should also theoretically make domestically mined gold significantly more competitive, right? Tell me, how big a structural tailwind is this going to turn out to be for you?
Yeah. Good morning. Thanks for having me on the show. Yes, the increase in the BCD would certainly help our top line. And as you said, there is going to be competitiveness in terms of domestic gold production. I mean, with already higher gold prices, our profit lines look good. And with this increase in the import duty, I think our top line would look much better. But the point is, it's really the domestic production. And actually, we are only 2 or 3 producers in this country. That includes Hatti Gold Mines and ours. But there has to be a significant increase in the gold production domestically. That is what the need of the hour now.
Modali, does it also, give a fillip to domestic mining in a big way? And how, what is the kind of opportunity that opens up for companies like you?
Yeah. I mean, in terms of domestic production, we all know that it's about 2 to 3 tons per annum. That's what we produce, again, as against almost 700 tons that we import. But the important thing that we need to remember is every ton that is produced in India will reduce almost 1,500 crores of import burden on us. So there is a definite need to increase the domestic production. And as we always maintained, India has a significant geological potential to increase the production capacity. The only thing that is required is faster approvals from the government and some kind of policy changes that are required to increase the domestic production. So once that is in place, I think the domestic production would significantly increase. We should look at it at least 20 to 30 tons of annual production as against 2 tons that we are producing in the near term, provided some of these changes that are made in the policy. I mean, I can take few examples, like some of the mines which have been discovered, they're still under litigations, and sometimes it is in the approvals are not in place. So those things, if they are set right, we will be getting into the domestic production very, very soon. In fact, one of the projects of our company itself is also in under litigation, which is ready for the production, which could easily produce about a ton of gold per annum. So these things also need to be looked at to ramp up the domestic production in the near term. And a long term, I believe India has the potential to increase the production even into the 3-digit figure. Not obviously in the next 5 years, but in the next 10 years, that should be our target.
Hi, Hanuma, this is Harsha. Very good having you here one more time. Give us a sense, and what's the kind of ramp up on your existing mines that you're penciling in maybe over the next 12 months as a potential, at least currently, given the kind of regulatory environment that there is? What's the kind of mine opening timeline that you can give us?
Yeah, I mean, as of now, we have a couple of mines, one in India and one is, of course, overseas. The ramp up is not always easy because it would require a lot of construction, apart from the approvals, which itself could take place. But the kind of ramp up that we would expect in these mines could take place in a couple of years' time, at least 30 to 40% increase from the existing capacity. That's how we look at it, but it will take time because any ramp up would require one approvals. The second one is the construction of the additional capacity in the processing circuits and so on and so forth. So it's not going to happen overnight, of course.
Right, Mr. Modali, so good having you on the show today. Thank you so much for your time and look forward to chatting with you after your earnings as well.
Thank you. Thank you very much.
Okay, let's take a very quick break. We'll come right back with the F&O picture in the market.